Welcome to Invest, where we talk about investing, finance, or professional development. As record time of 3:24 p.m. on Eastern Time, Ethereum hit $2,464, that about 3.25% so far. Respect over crypto markets, see clearly we are bright red at the moment, both on the equity side and on the crypto side. What's driving the sell-off, right, is mainly due to the Russian and Ukraine war crisis. It seems like it's worsening. But if you look specifically on what's really driving the anti-coination effect onto the entire market, it's mainly due to the US crude oil spiking to a 13-year high of $130, obviously during this weekend overnight. But as of this morning, we normalized a little bit, right? We had like a slight small rally in the beginning of the trading days. And with that being said, as the noon time begins, right, around like 1 p.m. on the Eastern Time, again on the East Coast, I'm based in New York City, it started to reverse back up, right? It started to spike all over again. We're hovering like at the low $120-ish dollars and then to mid-level and then subsequently almost touching the 130 mark again. And with that being said, obviously anti-coination the entire market, hindering the sell-off and propelling the intensity of this correction that we see in front of our eyes right now, right? And what's really driving this, you think about this in more of a economical perspective, you know, thinking like going back to like business school all over again, like why is this selling off, right? The main reason is because crude oil is, a necessity that, corporate companies and we collectively as residents of countries utilize on a day-to-day basis, right? And with the oil price increases at this dramatic fashion, right? Our companies around the world that are in the transportation industry, the airline industry, even the base product that we use for your lotions, uses petroleum-based product, like the jelliest of the world. And in addition to that, with the transportation side of the house, like trucking industry, right? You will need to pay more money to deliver the same amount of goods or service than before. And you're not talking about like increase by 5%, 10%. You're talking about like 40% if you look at the crude oil spike in the recent time frame, right? So with this sanction that's going on, despite it's a cutoff with Russia, we are basically squeezing them. But I don't know if this is a fair squeeze collectively, because this is kind of killing the circulatory system that we've had historically for corporate companies, right? And with Russia being cut off, and isolating them on the trade front, we are limiting ourselves with the supply of oil, not just domestically in the U.S., but globally speaking, right? And what this means, if we were going to be worsening going forward, this can have a really negative correlation onto driving a depression onto the financial market, right? So let that sink in real quick. So this is a fear that a lot of economists have not really thought through, right? And I think with respect to governments, yes, we try to restrict them, but ultimately, we do not know who's going to get the last laugh, to be honest with you, right? Because Russia is one of the leading supplier of oil, right? And if we were to cut it off, we are doing it in a disservice to Russia, obviously, but we might be doing a much more seismic disservice to the world in total. So this is definitely a negative news, right? So without, being more negative, I mean, it is what it is. Let's just dive into the technical analysis to see what's going on now, right? In terms of risk management levels, right? Right now, with respect to Ethereum, we are at the depletion level at the 39 out of 70. We form a death cross, and that's why we've been selling off, right? And right now, we are, again, per our technical analysis that we performed earlier today, we are naturally gliding at the 2,500, right? Which is where we're at right now. We give the benefit of the doubt that we're $20 below or $18 below. We sold down even more, worsening, right? We were at the 2,400, which was basically levitating. The real level that we need to potentially get down to will be a 2,362, which is like the worst level, right? If we get there, we will be basically at the cusp of basically 30 out of 70, which is presenting a buying opportunity if you believe that the Russia-Ukraine war will subsequently subside going forward and the oil price will subsequently deplete back to normal. But that's something we have to think about, right? Ultimately, the war needs to be over. The sanction needs to be be treated in a diplomatic way, that we need to come up with some sort of agreement, and ultimately allow for the normalization of the oil price, which is a important crisis that we need to get over, right? Respect to Bitcoin, down about 2%. We are touching at the exact level again. I'm not, this is not wizardry. This is just technical speaking the truth. With the 42 out of 70, so I think ideally, we might have more room to go down to if the oil prices keeps going up, right? Do we see 140? Do we see 150? I mean, if that's the case, that's surging by like 60% comparing to just like months ago, a year ago. But reaching to like 36 to 35, 500 would not be a surprise to me based on the current technical levels. Dogecoin at the 11 right now, so anywhere from current level to 1066 is still logical at the 34 out of 70. Cardano is down about 3.5%, anywhere from current level to 74 is still logical at the 34 out of 70. So Solana is at 81 right now, again, right, anywhere from 85 to 75 is still logical at the 38 out of 70. We're about to form a def cross, so that means we're going to touch 75 definitely based on the current setup right now. XRP is down about 2.78%. Right now we are still squeezing, right? Still squeezing until we've hit an apex, and the apex should technically translate into a surge because of the depletion that we're seeing right now. Polkadot down about 6.5%. And respect to current level right now, the 1624 right now, anywhere from 16 all the way to 14 is still logical to incur risks. Algorand's down about 5% right now at 74 cents. Anywhere from basically current level to a 69 is still logical for us. Respect to Shiba Inu is that low 2000s. We're basically hundreds away, right? So 2100, 1400, 900 from here will be good level to dollar cost average at. MagTech's about 3%, anywhere from current level all the way to 120 is logical. Right now we broke below 143, so that means we'll have the flat numbers coming, right? 130, 120, so I think 130 to 120 will be logical for us. AVAX about 1%. This is a head and shoulder pattern. It's a head, shoulder, shoulder. 59 to 50 from here. Terra is down about 2%. We are selling off right now as we speak. This is something that's technical, speaking the truth, right? We were hitting the apex at 97, which was where we were. And if you look back to my videos like a week ago, we knew we were like relatively overbought. So selling down to 62, 52 to 45 from here would be logical for us to dollar cost average at. So with respect to the overall market, it's definitely not a good news that we're seeing on this Monday, despite the small rally that we saw, right? Ultimately, we're still in a downtrend. And ultimately, we need to allow for the oil crisis and the Russia-Ukraine war to just like self-correct itself over time. But these presents like buying opportunity across the board if you're thinking logically and thinking long-term, right? And the big main event is going to be another volatile one on the 10th, coming up with the CPI report, and subsequently on the 15th and 16th, the FOMC meetings that we're hearing from Jerome himself on how we're going to be triangulating all of these like murky waters, if you may, right? Appreciate you. Have a good day. Let me know if you have any questions. Take care. Bye.